Paying an estimated tax payment. So the IRS requires that you pay a certain amount of tax through the year. Most folks are W-2 employees, so they have withholding that they're paying in each, pay period. But if you have untaxed income or income that does not have withholding, you need to be making estimated payments likely. If you don't make them during the year, the IRS will penalize you anywhere between 7% to 10%, let's say, based off interest and penalty. Most folks will think, hey, I'm just going to pay my tax in April 15th of the next year. But that's not the case. Yes, that is when taxes are due, but there's also a requirement to pay in a certain amount of tax during the year. So what you can do to avoid that interest and penalty I just mentioned is to work with a CPA, work with an accountant, work with G&A to say, look, Alex, I made this certain amount of income. There's no tax withholding on it. How much do I need to pay in to avoid interest and penalties? And we'll let you know when to pay it, how much, to make sure you avoid all that.
Is that what you guys do?
Yes, by being an owner of a business, yeah, we pay estimated payments. April, June, September, and then January of the following year. Me being compliant, I have to be. One is I got to practice what I preach. I got to show my clients like, hey, it works. Okay. It's hard to, bring that money out your pocket and pay the IRS and what people believe is early. Nobody wants to pay the IRS too early, and nobody wants to pay them more than they should. But what we're trying to avoid, and I've been using that word avoid because it's key. We're not trying to invade, we're trying to avoid paying more than we're supposed to. And that's more than you're supposed to typically comes in interest and penalty.